Hey there, my name is Teresa Timms, and I'm president of TDR Mortgage. I serve the entire California market. I'm here with my business associate, Ms. Fox.
Hello.
That's such a cute name.
Thank
Ms.
you.
Fox.
Yes.
Did you get teased when you were little? Like, did they call you Foxy, Mama?
Well, my middle name's Roxanne, so they called me Foxy Roxy.
Oh my God, how cute is that? Okay, so getting back to why we're here. We're going to talk today about helping self-employed borrowers buy houses.
Absolutely.
And one of the common things that self-employed borrowers do is they write off all of their income, right, Heather?
They do, yes.
So as an alternative to doing a traditional tax return qualifying, we're here to talk about business bank statement qualifying home loans for self-employed individuals. And when we're looking and evaluating someone to buy a house with business bank statements, we're looking at 3, 12, or 24 months complete pages to the bank statements, right?
You're correct.
And when we're evaluating these bank statements, Heather, what is the lender looking for? Lender's a wholesale representative that works for a wholesale lender that serves the broker community, which is me. So she's my liaison, and she helps us put together complex scenarios quite often. But when those bank statements go into the lender, Heather, what are they looking for?
I mean, they're looking for consistency, right? They're looking for deposits, business income related deposits in their bank statements. We want to see that a borrower is consistently putting business income in for the amount of months that we are doing. So, for example, 24 months, we would like to see consistency throughout 24 months. If it's 12 months, consistency throughout that. 3 months, consistency throughout that.
Okay. So why would somebody do 12 months, 3 months, or 24 months? Like, why wouldn't I just give 3 months?
I mean, really just shortens the documentation.
Okay.
So, I mean,
that gives you better pricing if you do more.
It does.
The more information you give,
to lower the rate.
So, if we're doing a full doc loan, obviously you're going to get, right now it's 2020, you're going to get rates in the 3s if you're putting 20% down versus rates in the 5s with a business returns.
Correct.
Now, a lot of times business returns are extremely complex. I think most business owners have a minimum, 10 to 15 page, maybe 20 or 30 page statement. So you mean to tell me you're going to look at every deposit the business owner makes?
We absolutely are.
Ugh, that sounds like a lot of work. So who does that?
My underwriters do it. I actually pre-screen them, so I'll look at them.
So you'll just peruse the statements?
Correct.
Okay.
Yeah. And
as a loan officer, what I've come to know is that if I see consistent deposits, I really don't question it. It's like, okay, this person is a drywaller. He's a contractor. So I see all these miscellaneous payments go in. And then if I see a very large deposit, like $100,000 deposit, to me, I wouldn't know necessarily question that, because I just think, oh, here's the bank statements, you're going to just qualify him. But what I've come to know is that's not the case,
that's
right?
not the case. Right?
Why not, though?
Because we need to make sure that it's business income.
Okay.
Yeah. So if he does have something like $100,000 deposit, what is it? Is it a job? Is it a big job? Maybe he did something more, but it was business related. We're going to want to source that deposit.
Okay. So on the business bank statement front, if you're in a habit of let's say you get paid in cash or check, and maybe they don't write it out to the business, maybe they give you the cash, or maybe when you get paid that you put it in your wife's account, or wherever you keep it. If you want to qualify using your business bank statements, you need to be depositing consistently your money into the bank. We're going to need to verify and validate that you are an active business via a business license. There's all kinds of QCs in these loans. So even though you're just qualifying with your bank statements, it still is a loan that I find, go through with a pretty fine-tooth comb.
They do.
Right?
Absolutely. Yes.
Okay. So with large deposits being questioned, if you are sitting at home and you want to find out what income can be used, all you have to do is sit down and tally up your statements. Now, Heather, if you get a little bit better break on the rate, let's say in 2018 you made, let's just say you had 200,000 of deposits. 19 wasn't so good, and so you have 100,000 in deposits. So then, would you still plan on giving the lender both years, or really you're just going to give them the most recent 1 year, or how does that work?
It's averaged over 24 months, starting from the most recent month. So it would be from January back 2 years, and we would average it.
Okay.
It's so. I mean, whenever you're submitting, we're going to do an average of the month prior to you submitting. Because obviously that would be the bank statement that we would have, right?
Okay. Well, I would think I wouldn't even show that I did better because then I have declining income. Do business owners have to worry about this variable declining income? Should that be a consideration when they're looking to qualify for a loan?
Right now, we're not doing that. In the past, we did, but right now we're taking an average of the 24 months bank statements. Yes,
that's aggressive.
It is.
So if somebody
we're doing just a straight 50% expense factor automatically.
Okay, there you go, right? So she just said that you're not getting 100% of the deposits that you're putting in. And why is that?
Because we need to assume some sort of expense factor. There's got to be some sort of expense for doing business. So we're just going to take 50%.
Okay.
And assume that they're going to have 50% in expenses.
An exception can be made when you're, let's say, for example, you'd mentioned before, if you're a consultant, you work from home, you don't have employees, you don't have products, we can sometimes use a CPA expense letter where this person is stating, hey, maybe your expenses aren't 50%, they're 10% or 11%, and then you can qualify with 90% of your deposits, right?
Absolutely.
Okay.
As long as they say that their expenses are 10%.
Okay. So I'm trying to think of any other tips or tricks. Mostly what you want to do is contact me and do an on-the-phone consult so I can point you and guide you in the right direction. And oftentimes it's just a simple analysis of your bank statements. And you can send those securely on my website. You could Dropbox me a link, or you can even stop by the office. We still do this old-fashioned thing of meeting our customers in person here at TDR Mortgage. Heather, did I forget anything? Did you have anything else that you wanted to let my viewers know about when qualifying for a home loan using business bank statements?
I think you covered everything.
All right. Well, for information on buying, selling, or refinancing in Southern California, pick up the phone and give me a call at 909-920-3500, and you can find me on the web at tdrmortgage.com. I'm looking forward to hearing from you. Thank you, Heather.
Thank you.